So Pennsylvania has some funny rules. First of all, even though you are now not only allowed, but if you are married, you are required to file a joint tax return. But in Pennsylvania, you have to do separate returns. All right? That's stupid, but that's the way it is right now. For federal purposes, you're allowed to go back and amend returns. So you have to do joint for 2013. But for 2012, 11, and 10, if it is favorable to file jointly instead of single like you already have, this is for people who have already been married, then you can go back and file the amended return. We'll talk a little bit about who should file an amended return and who shouldn't. And then you could also, if somebody died and you paid estate tax, you can go back and file an amended estate tax return. But again, the exemption is pretty high right now. All right, so now, as you might imagine, this issue is being hotly litigated in Pennsylvania. So the case is Whitewood. They took Corbett off the case. He was one of the named defendants himself. I actually thought when I wrote the article for PA Lawyers, they pretty much let me. They made very few changes. One of the changes that they did make is I said that I thought Governor Corbett was on the wrong side of history, and they didn't like that, and they took that out. But basically, right now, if you get married in Pennsylvania, nobody, including Pennsylvania, recognizes that marriage. So the state right now is, if you got married in Pennsylvania, if you want to have a party and you want to do some things, great. But at least right now, that is not going to be recognized. Again, you have to file a separate income tax return, whether you're married or not, whether it's recognized or not. For death, you can't name your spouse as a spouse for death certificates. And the other thing, and this was brought up earlier, there is a 15% Pennsylvania inheritance tax for same-sex couples, married or not. By the way, it's 0 for a traditional marriage, or non-gay, as Evan calls it. It is 4.5% for children. So you're being taxed worse, much worse, not only than just married folks, but you're even taxed much worse than if you're leaving it to a child. So we're hoping that that's going to change, but that's not the way it is right now. So, does it make sense to get married or not? And again, I'm going to leave out all the reasons, all the non-financial reasons. That one I'm going to leave to you and your partner and your shrinks and your attorneys and everybody else. I'm just going to go into the financial issues. So we're going to be talking about it from, I don't get all that excited about the federal estate tax because again, unless you have more than $5 million, it's probably not all that relevant. But for pensions and retirement plans, that's a biggie, and Social Security is a really biggie. So and then income tax. So let's do first the biggest reason why you might not get married. And I have a number of clients in the room, and there are some people who would be hurt by getting married. So there's, let's say, two possibilities: a marriage penalty and a marriage bonus. Marriage penalty means if you get married, you're going to end up paying more tax, all right, which is bad. Marriage bonus is if you pay less tax. So when is there a marriage penalty? Or when is it good to get married for income tax purposes? This is while everybody is alive. If you have significantly different incomes, it's usually going to work out better to filing jointly as opposed to two single returns. All right, the lower earner is kind of helping reduce the tax bracket of the higher earner. So that usually works out well, and maybe you save a couple $1,000s. If you're planning to sell your house, if you're married, you get a $500,000 exemption from capital gains. If you're single, it's a $250,000 exemption. So that's another reason, if you're going to sell the house, make a lot of money on the sale of the house, you're better off getting married. And if one person has no income because they stay home, the income taxes are going to be lower if you are married. Now, so that's the marriage bonus, folks. The marriage penalty is when you have two relatively equal earners. All right, so you have two people who have either a similar career track or similar earnings. A lot of times they're going to be caught in what's called the marriage penalty, and their taxes might actually be a couple $1,000s more. And if you're not planning to sell your house, then that's just not an issue. So, and then it's kind of funny the way it works, but there's different ranges. So if you're both earning between, say, $75,000, $85,000, all right, you'll pay less if you're single. Or even between 120 and 190, or between 200 and 400, you'll pay less. I don't know why the tables are the way they are, but there is a difference. Outside of those ranges, like if you're at 90,000 or 100,000, or if you're at 195,000, it'll be roughly the same. And by the way, it could be, as much as $4,800, $5,000 difference. So if that's every year and you're a relatively young couple, that might be more important than the Social Security and the IRA beneficiary and estate planning advantages. If on the other hand you're in your 60s and things like Social Security and estate planning become more important, then that might weight you more towards getting married, or if you have unequal incomes. That's another for getting married. Okay. The bonus is you save a couple $1,000s if you do have those unequal incomes. And then I think I mentioned if you're going to sell your house, it's $500,000 if you're married, which is the exclusion from the gain, and $250,000 if you are single.